Yeah, for us to understand better the perspective in which we are going to be analyzing and attempting to predict the direction of price from, we are going to be employing a counter trend trading style, which is the power of three. So we are going to be looking out for a trend, as you can see here. So by the close of the previous week, we are going to be looking at a swing high formed there. Then by the opening of the new week, we are going to be expecting an accumulation, then a manipulation for more buys to the upside, as we know that the market does two things: the market sells to buy and the market buys to sell. So if we are looking out for a sell opportunity, we are going to be looking for a manipulation to the buy side. Then if all rules are met and a pattern is formed, then we are going to be expecting a distribution to the downside after all the buyers are already trapped in the accumulation and manipulation. Then on the distribution, based on the entry model, you can take your entry during the week as the pattern follows. So this applies inversely. If it will be a buy as well, we are going to be expecting a swing low, an accumulation of orders, a manipulation, then a distribution to the upside. So inversely, so if it is a buy, this applies, you just apply this inversely. I hope you understand that. Welcome to the chart. So as explained earlier, we have highlighted the mode of operations we are going to be employing in analyzing the chart to us, as we are going to be using the power of three, which is a very effective trading style used as a counter trend strategy. As we are aware of, the market buys to sell and the market sells to buy. Following from this, we can induce that the best move is a counter trend, because you need to go in opposite direction of where the masses are heading to at the present point in time, because the first to seize opportunity makes the most money in the market. An approximately $8 trillion market, yet over 70% of traders still lose money. Why is this? It is not because of the technicals. It all boils down to psychology. However, right here we are going to be focusing solely on the technicals of the market, to brushing up our skills and to learn more and grow our knowledge about the forex market. So we are going to be taking examples of what we have learned earlier. So right here on EURUSD, this is an example. We can see the market is in a mini uptrend, and we can see this is the high of the previous week. And what happens? The market consolidates, generates an accumulation, and we can see a manipulation for more buyers. The buyers of this previous week, once they see the spike here, they will be happy, aha, thinking price will go up. Then what does the market do? Tada, the market reverses and goes against them, breaks this structure, and we can see the distribution to the downside. Right here we can see the low of a week. This is a sell trend, and what happens? The market accumulates, breaks down, manipulates more sell positions. The sellers here are very happy and glad that the market will sell further. What happens? Tada, the market reverses against them and buys to the upside, breaks the structure and distributes up. Right here we can see the high of the previous week. Once the market opens, the market accumulates and buyers are in this zone. Once buyers see that the market spikes the high of last week, they are so happy, buyers scale in more, and what happens? The market reverses against them. Tada, the market sells down, goes against them, breaks this structure, retests, and goes to the downside. So weekly we are going to be analyzing what happens in the previous week to have an insight to what is likely going to happen. Here is another example. We can see once the market creates a swing low, this is the high of the previous week. As the market accumulates, the market breaks up, giving the buyers more signals to buy more. You can see buyers scaling in more positions, and what happens, the market reverses against them and the sellers give the buyers a run for their money. So not understanding the concept of liquidity makes you become liquidity. So right here, the previous highs and the lows of last week, they are marked in this red line you can see here. So on Euro USD, the market closes near to the high of the previous week. So we expect when the market opens, we expect an accumulation, and for the market to break this high in an impulsive manner with one or two candles. Keep in mind, one or two candles. So you design your rules. So once the market breaks the high, gives us a pattern to sell, then we wait for a break of market structure, and we enter based on our entry methodology. So if the market does not do that, we have liquidity void here. As we can see, there are a lot of money sitting down here. Let's go to the daily chart so you can see the liquidity void. You can see this fair value gap, this candle right here. These are lots of money sitting down. And what does the market do? At every time the market moves in equilibrium, so there has to be equal number of sellers within this zone to fill this buy order. So possibly, if the market does not go for the high of the previous week, the market would reverse to these zones, as there is no strong support within this zone nevertheless. So the market will reverse to this zone, and the market could come down here to break the low of the previous week to give us a pattern to buy. So that is one beauty about the counter trend trading style. You are going to view the market from the perspective of the buyer and the seller alike, which gives room for analysis flexibility, and you are not just going to be rigid in your analysis. Now on USD CNH, we can see the market closes near the low of last week. Following from this, by the market open, once the market open, if this low is taken out immediately, then we invalidate this setup. However, if you have an accumulation within this range and the market come down to take out this low and generate a pattern to buy, then we can expect that the US dollar will strengthen against the CNH. However, the market could come up to retest some other block. However, there is no strong resistance within this zone, so the market could come up, take out the high of last week to generate a pattern for further sell. So those are the possible case scenarios on USD CNH. On USD CAD, you can see that the market closes near the low of the previous week. Following from this, once the market open, we expect a consolidation and for market to take out this low with one or two candles and generate a pattern for a buy for the US dollar to strengthen against the Canadian dollar. Otherwise, the market could come up to retest a resistance here, as we have a resistance that is not that strong, but there is a resistance within this zone which the market could come and retest for further drop, or the market could come up to take out the high of last week to generate a pattern for further sell. However, what is most likely, since the market closes near the low of the previous week, is for the market to manipulate more sellers, generate a buy pattern, and for the buyers to shift momentum and give the sellers a run for their money. On gold, mind you, these highs and lows of previous week, they are liquidity zones and they are very sensitive zones. Why they are sensitive is because, as you can see, gold buying up and making the high of last week, the buyers are optimistic, and that high is a very important zone for the market makers, as the buyers will be confident that if the high is broken, they are going to scale in for more positions. So the market maker, what does he do? He accumulates takes out the high, induce more buyers and drive the price away from them. So on gold, we are likely to see a buy to sell pattern if all rules are met, and nevertheless there is no strong support within this range. So if the market doesn't take out the high and consolidates, then it generates a new pattern accordingly. On silver, we can see a similar pattern to gold. So if the market opens and takes out the high immediately, then we invalidate this setup. However, if there is an accumulation and this high is preserved, then it is later taken out, so we can expect a buy to sell as well. And on silver, there is no strong support. However, right here we have a strong support, so if this high is not taken out, we can expect price to drive down to come and retest this support right here, as there is a strong support within this zone on silver. So understanding candlesticks is a very important tool you need to have in your arsenal. It allows you to be able to identify false support and strong support. So we have a strong support here on silver. Price will come down here to retest this support for a push up. On GJ, we can see that price is in a downtrend. However, price makes a retest of this zone and there's no strong resistance here, and after the retest, price comes down to fill out this imbalance last week. So we can see that price is in a range close to the high, close to the low. So if price moves to the high and takes it out and creates a structure for a sell, if all rules are met, then we can take a sell position. Likewise, if it happens inversely, then we can take a buy position, as GJ doesn't give a clear pattern in hindsight, but those are the possible case scenarios to happen. On NZD USD, we can see that price closes to the high of the previous week, so we expect a buy to sell as well, and there is no strong support. So if price doesn't take out the high, price could accumulate down to generate a new pattern accordingly, and the new patterns to be generated are always analyzed on the daily market outlook. On DXY, we can see that price closes near the low of last week, of the previous week, so we expect an accumulation within this range, this low to be taken out, and for the buyers to give the sellers a run for their money, after manipulating sellers to take more sell position once the low of the previous week is broken. And there is no strong resistance seen on GBP USD. We are likely going to have a similar pattern to NZD USD, as these are correlation pairs. So we expect an accumulation, a manipulation to the upside, and a distribution for price to drive down. And there's no strong support in the inside, so if price drives down, then we expect a new pattern to be generated accordingly, or for this low to be taken out and for a buy pattern if all rules are met. Now on BTC USD, we can see price consolidating near the high of the previous week, so we expect this high to be taken out with one or two candles to manipulate more buyers for a buy to sell, and for the sellers to give a strong pattern to the downside, so we expect the sellers to give the buyers a run for their money. However, if that does not happen, price could accumulate within a range, drive down to generate a new pattern accordingly. I wish you all a peaceful week ahead. Do like, follow, share and subscribe if you find this content useful.